Hello, my fellow investors, and welcome back to another fundamental analysis video. Today, guys, we are going to cover a company that has earnings this upcoming week. Now, the one I want to cover, guys, is one that unfortunately we will not be able to cover because we don't know if we're going to do a live stream or not on that day. And the day I'm talking about is Tuesday, and the company I'm talking about is AMD. Now, there are other ones here that we would love to cover, like Amazon, for example, McDonald's, Coca-Cola, however, and even SMCI too. However, AMD is definitely a staple here on the channel, and I really would just like to do a 10-year analysis on this company. We normally done the 5-year one. However, with 10 years now of data, I think we're going to see a lot more bad junk with them, and based off of that, we may change our stances to where we think we might buy them. So that's why I wanted to cover them in advance before they actually had earnings. So make sure to like, subscribe, comment. Really does help her with the algorithm on YouTube as well as Rumble. Make sure to follow us on X, and if you guys would like to join our Discord, the link to that is in the description below. So with that said, let's get started with the analysis, the 10-year analysis on the company AMD. So the company AMD, a staple, right? An absolute staple. This is by far one of the greatest, I don't know, it's not a meme stock, but man, there's a lot of hype when it comes to this one. Absolutely a lot of hype. And while I do love their products, I mean, guys, the laptop I'm recording this right now has our AMD Ryzen 6000 series chip in it, right? So I do like the AMD processors way more than that of Intel. I think that they're significantly better. However, the stock itself is looking a little bit expensive. Even if you don't take a look at all of the fundamentals like we do here on the channel, just based off of the PE alone, you know something's wrong. So let's get into that right now. So let's start off with the earnings. Now, this is a massive surprise. So last quarter earnings came in at 77 cents, which was in line for the EPS normalized actual. For the EPS gap actual came in at 41 cents, beat by 15, and revenue of 6.17 billion. That was a beat by $29.4 million. And if we take a look at these upcoming earnings on the 30th, oh boy, this is not looking good. EPS normalized estimate of 61 cents, gap estimate of 17 cents, a revenue of 5.45 billion. Guys, wow, 33 revisions total, 31 of them to the downside. So they're expecting this thing to be very, very bad. In fact, here's this article. Advanced Micro Devices, AMD, expect sell-off to accelerate on weak earnings. So they're expecting a sell-off, guys. The summary for this article, it is AMD stock has seen significant gains in the recent past, but fundamentals have failed to keep pace. Oh, it always comes back to fundamentals, right? But then again, some people will always find a reason why they'll bring a stock up, even though the fundamentals just aren't there. In fact, AMD's operating income has been declining steadily over the past 3 years, while analysts estimate for future revenue and EBIT have plummeted. I argue that market participants have made a major mistake pumping up the stock, and investors will now likely experience the correction of this mistake. On technical level, AMD stock has already started to break aggressively, dropping close to 30% from all-time highs made in early March this year. Looking at AMD's upcoming earnings release for the second quarter of 2024, I expect the sell-off to continue. My target price is $101. So there you guys have this person's, actually, what's this dude's name is, or Cavenag Research. They have it at $101. Let's actually see what mine is. See if it actually comes close based on the discounted free cash flow approach. So now let's jump into the calculator. We got the ticker for AMD, market cap of $254.4 billion, and look at that PE. Yikes! So if you don't know anything about, cash flow, net income, revenue, shares outstanding, if you only know PE, you know a PE of almost 300, there's a problem, right? Like, I don't think I need me or anybody else to tell you that this is a big problem, right? And this is with a current share price of $157.40. So maybe even a price of 101 is still a pretty dang high PE. So taking a look at this, guys, on the 1 year, we can see that this is up a whopping 83.15%. Year to date, 6 6.78%. Now, we can tell that on the 52-week range, $81.02 to a whopping $227.30. So we're smack dead in the middle when it came to this. And if we take a look at this in the 1 month, this is down 11.54. On the 6 months, actually up 68.04. As of the 5-day, up almost 6.5. And on the 1 day, as of Friday, it gained 2.37% with the rest of the market. Now, taking a look at this, their 10-year average free cash flow, it is $776.80, and the last year's free cash flow, it is $1.12 billion. So let's take a look at the fundamentals now. Again, first time that we're looking at this on the 10-year, and to all of those of you who do not have Seeking Alpha Premium, this is probably the first time you're looking at this too. Net income for AMD 10 years ago, negative $403 million to 1 year ago of positive $854 million. That is an increase of 312%. Guys, you look at this graph and this is not enticing in the slightest. It really, really isn't. You had a massive spike 4 and 3 years ago, COVID related, right? COVID related, as well as the AI hype as well. But aside from that, this net income is pretty subpar all in all, right? It really is. It's coming down ever since 3 years ago, and by the looks of it, it's coming back down to the sub $500 mark, all in, or sub $500 million mark. So all in all, guys, I'm gonna have to give this thing like a 30%, and I would argue even that's too high. Looking now at the cash flow, once again we see something very, very similar. We got 10 years ago of negative $193 million to 1 year ago of $1.12 billion, as we saw. This is an increase of 681% with an average of $776.8 million. Once again, negative across the board from 10 to 7 years ago, or 6 years ago, sorry. Positive, 5 and 4, massive spike after COVID, as well as the AI hype, and then now it's coming back down. As of 1 year ago, as you guys can see, that's a pretty big drop from 3.1 down to 1.1. So once again, guys, I'm going to have to give this maybe a little bit better. I'm going to have to give this like a 35%. Now, the revenue is the one thing that people would look at AMD and may want to pump it, because they just went from $5.51 billion 10 years ago to 1 year ago of $22.7 billion. That is an increase of 312%. Guys, I get that this looks very, very enticing. However, that is a massive, massive spike going from 5 years ago to 4 to then 3. Absolutely massive. In fact, you can see that it is coming back down. I don't necessarily know where the revenue may be going. All in all, though, this to me, it's like a solid 65, because I think it may continue, but at the same time, I just don't know. Here are the assets as a reference only. You can see a pretty big spike when the AI bubble began, going from 3 years ago of $12.42 billion to 2 years ago of $67.6 billion. The same with the liabilities, as you guys can see right here, massive spike 2 years ago. And the assets minus the liabilities looks, I mean, yeah, it looks like that, pretty much flat from 10 to 6 years ago, and then a massive, massive spike. Wow, 3 years ago to 2 years ago, once again during the AI hype, going from $7.5 billion 3 years ago to $54.75 billion. Average total assets being $22.64 billion. Liabilities of $5.84 billion, a difference of $16.8 billion. Oh my goodness, I don't know. I just don't know. I'm assuming that the assets will get a lot better as things go along, or once you have an asset, right, it's essentially you have it. So I'm going to go, guys, with a solid, I'm going to say a 70% on this one. We'll see how things continue to develop as the time passes. And we're looking at the cash flow minus the liabilities. It's actually looking very, very good up until 2 years ago when they piled out a ton of liabilities, which we saw. However, this may be a good or bad thing. As of 1 year ago, they're negative $11 billion, which average cash flow minus average liabilities of negative $5.13 billion. So essentially, they've doubled their average as of 1 year ago. I'm going to have to say, guys, I'm going to have to say like a 30% when it comes to this one. And now shares outstanding is the one thing that pretty much kills AMD every single time, because this is a massive, massive share dilution. Now, the only time where they brought it down was 4 to 3 years ago. You could see that little decrease right there. However, on the 10-year, we got 776 million shares to today of 1.62 billion shares, guys. That is an increase of 108.25%. And guys, they've been increasing even when their share price hasn't been overpriced. So I'm gonna have to give this one an absolute garbage score, 0%. Maybe you could argue 5, but really, I don't even consider this little bit of a buyback anything. So 0% for me. And lastly, cash and equivalents. They currently hold $4 billion with an average of $2.13 billion. So looking at the overall grade, guys, it's a 38%. This is not looking good. Not looking good at all. We just need a lot more consistency when it comes to AMD, and that's something that we just haven't had. So now let's take a look at the discounted free cash flow, and this is where I'm going to piss off a lot of people. I can already tell because, guys, not inputting anything. Oh boy, on a base level, $1.68. Adjusting for debt, $5.80. So yeah, can't wait to see everybody saying, oh my goodness, you're wrong. Look at AMD. How could you possibly say that? A few years ago, I got a comment AMD to 200. And it did hit 200 and now it's back down again. So yeah, understand though, looking at that PE of nearly 300. Yeah. $5 actually does make a little bit of sense here, doesn't it? Now, let's actually input in some numbers. Let's start off with the revenue. Guys, the average 10-year revenue has been 26.27%. I'm going to give them the benefit of the doubt. And I'm going to say that, right? I am going to say that. I'm going to say that they're going to continue doing this. However, their revenue has just been really spiking within the past 3 years or so. But I'm going to give them the benefit of the doubt. And I'm going to say along the lines of like 20, I'm going to go the Mike way, right? I'm going to go with 20, 25, and 30% when it comes to revenue. So that really is bringing up the revenue a whole lot. Now, when it comes to the projected share buyback, they have been issuing, guys, a lot of shares. So let's start off with the fact that, well, on the average, share issuing year over year has been around negative 9.85%. So essentially 10% of shares every single year. So let's do that with the median. Then let's go up to negative 12, right? The negative just means that they're issuing. And then let's go up to negative 8. I think that that's fair. Now, you guys can see the numbers have changed a lot, and one of them is at $35.52 on the highest assumption, revenue growth of 30%, and a projected share issuing of 8%. Now, here's where everything's going to get completely nuked, the recurring rate of return, because if this is AMD, if I'm expecting a big return, it's a chip company, I would expect the hype to continue. I want a nice return on this, right? So let's just say beat the market. Say beat the market by 15%. So the S&P normally does 7 to 10. I say, you know what? Let's do 15%. And basically 46 cents to $1.36. Not adjusting for debt, and adjusting for debt, $1.71, $3.84. Guys, I don't know what else to tell you. Right? I do not know what else to tell you. I look at this PE of nearly 300. I look at these fundamentals. They're just not there. They are just not there. Now, what can we get this thing to the 101? Well, let's change this to 7%. Let's just say that you only want to do the bare minimum, just like the S&P 500. Even then, it still doesn't bring it. Even then, it still doesn't bring it. And if we actually were to take a look at Seeking Alpha's year-over-year perspective when it comes to this, we can see that the revenue growth year-over-year, and again, this is Seeking Alpha talking, guys, not me, negative 3.9%. The revenue forward, is estimated at 11.12. So even with this, guys, I'm still bringing them up a lot higher than even Seeking Alpha, and it's still not there. So AMD, guys, is a massively hyped company. That's just the end of it. So it sucks, right? It sucks. There's a lot of hype to this. It's a great company. I love their products. I love their chips. I think that they're doing great, but they're not worth $157.40. There's just no way. There's just no way. So on a 10-year perspective, this is what the company looks like, right? It is what it is. So tell me if you guys think I'm crazy. Tell me if you guys think I'm wrong. At the end of the day, every investment is the present value of all future cash flow. And, I don't want to overpay for a company that isn't giving me what I want out of them, right? So that's just the short end of it. AMD, to me, love the company, love the products, way too over expensive. So all in all, that pretty much does it for this 10-year analysis on AMD. And I guess we'll see how the earnings reports come out. So they're expecting it to be very bad. They're expecting it to keep falling. We'll see what happens, right? We'll see what happens. So thank you so much for watching. Make sure to like, subscribe, comment. It really does help with the algorithm on YouTube as well as Rumble. Make sure to follow us on X. Make sure, if you guys would like to join the Discord, that's also free as well. And with that said, peace out, and we will see you all next time.